To start off, can you give me a quick overview of the quarterly's contents? And how does this compare to a year ago or even the prior quarter?
When we last spoke in November, certainly things looked a little different. I suppose what has changed since November is that one of the largest reasons for supply being down, the Anglo-American platinum converter plant outage, was expected to be November and December. Fortunately, they managed to recommission the phase A in early December, and that brought back some ounces. But if we just look at what we're publishing today, the 2020 demand was down by 7%, as one would expect, mostly the impact of the coronavirus. But supply was down a massive 17%, and that's given us a record deficit in 2020 of 932,000 ounces. And I think the corona impact as mines shut down to prevent the spread of the disease was around about 400,000 ounces. And all of the rest was as a result of the converter plant. So we had a significant deficit in 2020. What we saw through Q4 was that strong demand came back from automotive, jewellery and industrial segments, and investment demand remained strong. So we had a big deficit in 2020, and then what we're publishing also has a look at what we expect for 2021.
The quarterly includes a revised forecast. Can you talk to me a bit on this? And I know you spoke about a record deficit, but apart from that, were there any other significant changes over the course of the last 3 months or year?
So certainly, okay. So in terms of the updated forecast for 2021, what we are seeing is what you might expect. Industrial demand expected to go up by about 10%. Jewellery demand is expected to be up by about 13%. But automotive is expected to be up by 25%. And although we've had a lot of economic activity that's increased, there's been an increased demand for jewellery. I think the surprise is that although automotive sales haven't quite returned to pre-pandemic levels, we're getting a significant increase in automotive demand, mainly as a result of increased sales of particularly heavy-duty vehicles in China, but more importantly, much higher loadings to meet tighter emission standards, both in China and across Europe. So what we're seeing is a strong recovery. And then investment demand, although we're not expecting it to be anywhere near the record that we saw in 2020, we're still forecasting over 750,000 ounces of investment demand. And that's higher than the 5-year average. Even if you take the record investment demand in 2020 and in 2019, the 5-year average is still below that 750,000 ounces. So certainly strong investment demand. I think to your question about what's changed over the last 3 months, I think one thing we saw in Q4 that was quite unusual is that platinum has a very strong correlation to the price of gold, and platinum has an extremely deep discount to gold. And what we had seen earlier in the year is that as global risk increased, there was a large rush into gold as people were looking for a diversifier and looking for hard assets. And a lot of them bought platinum. In the US, for example, we saw platinum bars and coins completely sell out by about April, and those stocks only returned later in the year. So bar and coin demand would have been higher in 2020 had those stocks not run out. So what happened in November is we saw this disconnect where both the correlation and the discount to gold disconnected, and we saw the platinum price increase strongly while the gold price was falling. And that continued from November through to now. And Simone, we haven't seen that kind of sustained divergence since the financial crisis in 2008. And what that really is investors putting into the platinum price recognition of platinum's industrial uses. And despite that performance, platinum's up significantly, gold is down. What we've got is that platinum, even at the elevated prices, is still significantly cheaper than gold and has a significant discount to palladium, where it's a one-to-one substitute in order catalyst. So quite surprising to see extremely strong change in the platinum price, yet it's still significantly undervalued.
COVID-19 has been top of mind for a lot of people for the last 12 months at least. I mean, how has the pandemic itself influenced platinum's movement in 2020? And with widespread vaccines programs now in play across the globe, does this mean we'll see signs of green shoots or further growth for the commodity?
So certainly the impact on industrial activity or economic activity impacted industrial demand, as did automotive sales that were down. So automotive sales have come back strongly, as I said, not quite to pre-pandemic levels. So we see significant increase. But I think the most sort of profound change was that the supply from South Africa came back to normal levels at the production level, but certainly not because of the ACP outage. And I think the other interesting thing is that over the last few months, or perhaps over the last year, I think sustainability and clean air have become quite topical, and we've seen a lot of development regarding the hydrogen economy. I think with the Biden administration within their first week rejoining the Paris Climate Accord certainly signaled a very strong implementation mode with regard to the hydrogen economy. And what that has resulted in is that the demand for producing green hydrogen that uses platinum, and also potentially the fuel cell electric vehicle platinum demand out to 10 years is probably an additional 1 million ounces per year. Now, that's interesting for investors. It's a bit too long term to affect investment right now. However, many investors that had not considered platinum as an investment before, having joined the dots between platinum's strong links in producing green hydrogen and in fuel cell vehicles, took another look at platinum. And what they saw was certainly constrained supply, and in addition, significant substitution of platinum for palladium in the near term. We estimate that that will be an additional 1 million ounces per annum within 4 years. So this is something that is quite interesting. You could look at the deficit for 2021 of only minus 60,000 ounces. And so that's basically a balanced market. But I think the potential demand growth makes it far more interesting than just that small deficit.
Thank you. You've actually answered my question on the whole decarbonization and green hydrogen. So we spoke a bit about the automotive sector. So platinum automotive demand in Q4 grew by 5%. Can we expect to see this increase? By the sounds of it, we might just. And I mean, and especially seeing as how manufacturers are now seemingly ramping up production in Q1 of 2021. I mean, what are your thoughts on that? I know you have briefly touched on this. I don't know if there's anything you'd want to add to that.
Sure. So I suppose there's two things. I mean, I think firstly, let's talk about automotive. And there's been a lot of negative news flow around platinum automotive for several years now. We had the Dieselgate scandal in 2015, and we had the percentage of diesel passenger vehicles in Europe drop from over 50% to below 30%. And what we've seen is that started to come back a little. And although there's been a very strong push for battery electric vehicles, that growth of sales has been disappointing, I think, to everyone, really. And what we're finding now is that the focus has turned during the pandemic to CO2 efficiency. And yes, we will have many battery vehicles, we will have fuel cell vehicles on the road in 10 years' time, but we certainly need to make sure that the tail of internal combustion is clean. And I think that's where there's been a shift in focus, is to say that if there is an internal combustion engine, it needs to be CO2 efficient. And that's where, for example, the diesel mild hybrid and gasoline mild hybrid are way better in terms of CO2 emissions than conventional engines. So I see a very strong growth. We've seen a large proliferation in the number of diesel vehicles that are mild hybrid over the last 12 months, and gasoline hybrid as well. So I think what we're seeing is that there's likely to be an inclusion. There's a lot of talk about bans of internal combustion engines in 2040, 2030, 35. But what we'll need to see is a combination of battery, some fuel cell, more likely heavy duty, but certainly a combination of gasoline and diesel mild hybrid. And remember, the diesel mild hybrid is at 35% less CO2 emissions than a conventional gasoline engine. So I think the fact that Dieselgate was 5 years ago, automakers are starting to promote diesel engines. The significant CO2 fines in Europe this year mean that they've sold a lot more plug-in and a lot more hybrid vehicles And we see that trend continuing, but it seems to be a little bit in the background at the moment. But for 2021, I think a further increase in sales, depending how the COVID impact on vehicle sales unravels. There's one angle that says that people have saved a lot during lockdown by not having to travel, not going on holiday, and people are quite keen to buy a motor vehicle. So we'll see how that plays out. And then perhaps the other factor that's been quite relevant recently is that not only did the ACP plant outage reduce supply in 2020, is that both Anglo Platinum and Sibanye reported recently, and Anglo was quite clear that the stock that had built up during 2020 would take at least 2 years to be processed through the ACP plant. So, the concern was that whatever was built up might come back. In the data that we're publishing today, there's about 200,000 ounces of platinum that is returned due to the ACP outage included in our supply, and still we have that small deficit. The other thing is that both Anglo and Sibanye are projecting fairly flat supply out for the next 3 years. All of the major producers are talking about expansion projects, but right now there isn't one major project in play that will substantially increase platinum or palladium and rhodium output from South Africa within the next 3 years. So I think our investors are noting that even with the increasing platinum price, very strong palladium and rhodium prices, that supply is unlikely to respond in the next 3 years. And that's just making, obviously, price pressure a little bit more on all three metals.
I mean, how big of a role will investors continue to play in the year ahead? I mean, obviously, we've seen that they do have quite an influence over the market. So what are your thoughts on that for 2021?
It's a good point. We saw a marked change in investor attitudes towards investment demand during 2020. I think the big surprise is that some investors tend to want to ignore ETFs and suggest that ETFs are a liquid stock that could come back to the market, and that is their choice. We don't agree. We think it's very material to price discovery. But what happened in 2020 is that we nearly had 600,000 ounces of bar and coin demand. Now, bar and coin demand tends to be quite sticky. People pay a premium. They tend to hold those bars and coins for a lot longer, often passing them down through generations. So that strong bar and coin demand of, we estimated 600,000. I think it turned out to be 500 and something. I'll just double check the number. Turned out to be 586,000 ounces in 2020. A lot of people said that you can't quite ignore that, and that would have been much higher had we not had stocks running out in North America. So I think the attitude towards bar and coins definitely that it's likely to be a continued portion of demand going forward. So a lot of forward estimates are including something. And then ETF demand, I think in the 14 years that ETFs have been around, there's only been, I think, 1 or 2 years where that's been negative. So in general, funds tend to buy and hold platinum ETFs for quite some time. And we're seeing a lot more investors, particularly in the North American market, owning platinum for the first time and using ETFs as the way to hold that position. So I think the importance of investment demand, particularly when you've got a market that's in deficit. And the other thing that's added to that is that, we had 1 million ounces going to ETFs in 2019. That hasn't come back. We had another 500,000 ounces go in 2020. And in addition, we had 500,000 ounces of 50-ounce bars that went into NYMEX future stocks. So, that's nearly 2 million ounces that has been, tied up, purchased in the spot market and is in vaults. And that certainly makes platinum far less available. And then during 2020, we saw strong imports into China, not just through the SGE, but directly to industrial users and jewelry manufacturers. And those really were purchases based on demand growth, industrial expansion, as well as more jewelry sales. So it wasn't as if it was a speculative purchase. So I think this market is just in deficit, but way, way tighter than it was. So I think far more people are recognizing that investment demand, certainly through 2021 and 2022, will be very material to price discovery.
Fantastic, thank you. That's it for my set of specific questions. I don't know if there's anything you want to add or maybe highlight for us.
Thanks, Amanda. I think we've covered the key issues. Certainly an interesting, unpleasant for many 2020. But certainly it looks like we've got something to look forward to. And, all three PGMs are in a forecast deficit by all the majors as we move forward. So, yeah, interesting to see how 2021 plays out.